Students. So today's lesson is going to be on charting and the basics of it, like how I learned it and how it can help you out. And charting is just one of the tools that can help you make a possible price prediction. Nothing is 100% guaranteed. This is not financial advice, and I think you should use it as one of the tools in your arsenal. Damn, got the COVID. Um, Anyway, so if you're looking at this chart, this is a chart of current position I'm in with OCGN. It's not, you don't see my position here, but basically, look. I mean, it's just pretty cool. You always want to follow the trend, and Wall Street bankers know this. Hedge fund managers, everyone knows this. So it becomes a self fulfilling prophecy. When you take using TradingView.com, it's free, so you guys can use it, and you want to click on this little arrow here, and with this arrow you can draw these trend lines. Delete. And I use these trend lines to help me predict the price, where it is, where it's going. When you start to study the game, you understand what certain patterns look like. So this is live right now. This is actually going on right now, and this is a 30-minute chart. You can change it to an hour. I like to use the 30, but anyway, all these touch points, 1, 2, 3, this makes for a really good trend line. It's trending up. So if you were to buy the stock, it may be a good, maybe a good stock for you to trade if you want, if you're looking for it to go up. So what I use this for is to figure out where the where the price could actually be going. So we call this a support line, right? We call this top line a resistance, because every time it goes up, it hits it and comes back down. Think about, like, if you jump up and you touch the ceiling. This is the ceiling. And as you can see it playing out right now, is that it hit this support line, and it looked like it was going to break through, but it's coming back down, and it could come back down. It could come back down below. But see, this little blue line is called the VWAP, or VWAP, the value weighted average percentage. Sometimes it comes down there, touches it, bounces around, and goes up, but it also can come back down to this line. So if I wanted to, I could probably short the stock or put a put on it and ride it down to about 11. I'm sorry, to about like what? Yeah, about $11. Sometimes we have an early breakout and it breaks out early, but what we're predicting is that this is going to break out to the same distance it broke out to this. So usually you measure a line from the bottom of this wedge to the top, and we call this wedge, it's an ascending wedge, because it's ascending, it's going up. It's almost a symmetrical wedge, but it is sort of like an ascending wedge. So what it is, I click, I got one of the lines here, I drew the line here, and I click on this, and I click clone. I cloned it, and I put it here. So this will break out generally. Ascending wedges or descending wedges usually break out to the same distance, top and bottom. So let's see. Let's see what we're looking at. So we're looking at a price increase of about 26%. So our price target is, can't even really see it. Disappeared. So price target is about 1496, on or about the beginning of May. This is like I said, this is one part of the tools that you could use in order to play this game. All right. So this is the technical analysis. Now, there's fundamental analysis looking at, the income statements, what's going on with the company on a company level, looking at like balance sheet, income statement, stuff like that. Now, I do a little bit of both fundamental and technical analysis, but I like to use technical analysis because that's what the big boys use, and it becomes a self-fulfilling prophecy, because you're not the only one that uses technical analysis. People go to college to learn technical analysis, and in order to get an actuary's degree, they learn technical analysis. So when this comes down to this point, like, what do you a lot of people are wanting it to come down here. And when it gets down to here, people are going to buy. They're going to set their buy orders, buy in, and it just becomes a self-fulfilling prophecy. It starts to go up. So what I like to do is I like to say, okay, well, if I try to manage the risk to reward, which a lot of people miss out on when they're trading. So if I'm going to get in this position, I want to get in. I'm gonna probably wait. I'll probably, if I was putting a put on this position, which is betting that it's going to go down, I would get in now, and I would put my stop loss right around 12, uh, right around 12.60, and then write it down to about this $11 level. But basically, if we catch a move from here up to our price target, which is, so that's another 10%, because I think it was up before it was 25%. I'm going to show you an example. Let's look at the chart. Let's see if there's any other things. Oh, so some. This is a bullish pattern. Some other bullish patterns to look for are W's, right? Call it the George W. Usually, when you see a W, that's a good for a win, but it's also a bullish signal. Let's go to the 2-hour chart. Let's see if there's anything else we can identify here. 4-hour chart. You can just notice some trends here with this chart. Oh, so I was looking at this chart earlier. I knew it was this chart. So what do you see here? This is like a symmetrical wedge. Maybe an ascending wedge. But this right here, this is a nasty descending wedge. So if you were short this position, or you wanted to short it or go long or put, you could use this. This would have been a great chart. It played out perfectly. Now, it doesn't play out perfectly all the time, but I would say, 70% of the time it does, and that's a good odd. So if you look, this is what's happening here. You're seeing this. You know how you take a ball and you throw it and it bounces? Each time you throw the ball, it bounced, and it bounced less and less until it broke out to the downside. Now, um, it didn't break out 100% this long this way, but it went down pretty considerably, and it didn't break out to the date. So if you look, if according to the chart, it should have broke out on, it should have broke down on February 17th, but it didn't. It took until February 23rd to do that, which is still a good guess. So you could have made some really good coin, you know, on the way down. And then what you could have done is when it dropped on the way down, wait it and let it bounce back up, and you could have rode it on the way back up. So you can make money both ways, when it goes down and when it goes up. Let's see. Oh, you know what that noise is? That's my computer fan kicking on. I gotta probably put my headphones on. Well, that's a lesson for today, guys. I'll be coming out with some more content soon. Peace.